Welcome to the Contractor Success Map podcast. I'm your host, Bradley Hart, and I'm an expert on how you can get the most out of your contracting company. The reason I designed this show is to help you turn your contracting company from a people-dependent money pit into a process-dependent cash cow to have the freedom you dreamed of when you started your business. Every Friday, we're releasing podcasts with information to help you get the most out of your contracting company. Be sure to join us at www.contractorsuccessmap.com. and subscribe to receive our latest articles and special offers. And the best part, it's all free, just for you.
Hello everyone, Norhalma here once again, welcoming our subscribers and podcast listeners. If you're new here, thank you for allowing us to share insightful marketing, accounting, and production tips and strategies for your construction business. In episode 618 today, Sherry DeHart discussed a deep dive into gross profit margin for construction contractors. Let's get into it. Understanding and managing your gross profit margin is crucial to ensuring the sustainability and profitability of your business as a construction contractor. This key financial metric not only reflects your company's financial health, but also helps guide your pricing strategies, project management decisions, and overall strategic planning. Profit is the money left in your business after all your expenses have been paid. An income statement, also referred to as a profit and loss report, reveals what profit your construction company made last month or last quarter. Your profits are detailed in two figures, namely, gross profit is what's left from sales after deducting the cost of goods sold or services provided, and net profit is left from gross profit after operating expenses, or your business overheads, are deducted. Note that net profit isn't the final bottom line profit until all taxes have been paid. Gaining more significant profits depends on accomplishing all the little things better rather than making one huge change. What is gross profit margin? Gross profit margin is calculated by subtracting the cost of goods sold or COGS from total revenue and dividing that figure by total revenue. The formula looks like gross profit margin, or percentage, equals net sales minus the cost of goods sold divided by the net sales times 100. Breaking it down. Net sales. This is your total revenue after subtracting returns, discounts, and allowances. And cost of goods sold, or COGS. For construction contractors, COGS typically includes direct costs associated with the project, such as materials, labor, and subcontractor fees. This margin provides insight into how efficiently a contractor manages these costs relative to their revenue. For example, your small construction business earns $50,000 monthly in net sales, and your COGS totals $20,000. To calculate, gross profit margin equals $50,000 minus $20,000 divided by $50,000 times 100 equals 60%. This means 60% of your revenue contributes to covering overheads like rent and salaries, and eventually becomes profit. Why is gross profit margin important? First, financial health indicator. A robust gross profit margin indicates that contractors can cover operating expenses and generate profit. Contractors with thin margins may struggle to survive during economic downturns or project disputes. Second, pricing strategy. Understanding your gross profit margin promotes better pricing strategies. If the margins are too low, it may be time to evaluate how you bid on projects or manage costs. Next is operational efficiency. Analyzing gross profit margins can help identify inefficiencies in project management. If specific projects consistently yield low margins, it may indicate underlying issues that need addressing, such as waste or mismanagement of resources. And benchmarking. Comparing your gross profit margins to industry standards can offer insights into your competitive position, while margins vary based on project type and geographical location. Knowing where you stand can help identify areas for improvement. What is a good gross profit margin? In the construction industry, gross profit margins generally range from 10% to 20%. However, this can vary based on the type of projects, residential versus commercial, market conditions, and geographical area. High-demand markets allow for higher margins, whereas competitive bidding environments push margins lower. Reevaluate your gross profit percentage. Another area most construction company owners let fall between the cracks is gross profit on the material. Gross profit is the difference between revenue and the cost of the material before overhead. Here are some thoughts on gross profits. Lower prices do not always equate to increased sales. Sales resulting from lower prices will require you to sell more to maintain the same level of profitability. Generally speaking, raising your gross profit on materials by 1% would require a 4% increase in overall sales to realize the same gain. Increasing sales is always desirable, but in reality, you have more control over your estimating and pricing than you do over sales or potential sales. People who buy from you solely due to pricing are customers, not clients. They belong to whoever has the lowest prices in the marketplace. How to improve your gross profit margin? Accurate estimation. Invest time in accurately estimating project cost. Underestimating costs can lead to lower margins and financial strain. Second, increase your prices. If your products or services are underpriced, gradually increase prices. Outline the value you provide so clients understand what they're paying for. Next is reduce your COGS, or cost of goods sold. Source raw materials strategically. Negotiate with suppliers for discounts or bulk deals. Lower manufacturing costs. Consider automating manual processes to reduce labor costs in the long term. Fourth, regular financial reviews. Conduct regular reviews of your financials to identify trends and areas for improvement. Analyzing project performance can highlight where margins can be improved. Fifth, effective resource management. Ensure labor and materials are allocated efficiently. Reducing waste and improving productivity can have a direct positive impact on margins. Next, negotiate better rates. Cultivate strong relationships with suppliers and subcontractors. Negotiating better rates can directly affect your COGS and improve your margins. And seventh, invest in technology. Utilize project management software to streamline operations, improve communication, and enhance budgeting. These tools can help manage costs more effectively and keep projects on track. Gross profit margin isn't just an abstract financial concept. It's a powerful tool. It provides insights into your business's efficiency and profitability, and helps guide critical pricing, cost management, and scalability decisions. Don't underestimate the impact of regularly tracking your gross profit margin. It can help you adapt to challenges, make smarter decisions, and ultimately achieve long-term success. In conclusion, gross profit margin is a vital metric for construction contractors, influencing everything from financial health to pricing and project management. By understanding and actively managing this figure, contractors like you can enhance operational efficiency, boost profitability, and ensure long-term success. Keep assessing your projects, refining your estimates, and adapting to market changes to maintain a healthy gross profit margin and drive your construction business forward. And that ends Sherry's blog post. Remember, we can help a little or a lot depending on your business needs. So if you would like to learn more about gross profit margin, or when you're preparing for tax season, or just confused about which product to purchase at our Fast Easy Accounting store, please don't hesitate to contact Sherry by calling our toll-free number at 1-800-361-1770 or our Washington State local phone line 206-361-3950, or you can always email her at Sherry, Sharie, Sherry at fasteasyaccounting.com. And of course, our promo code is still available for you to use, our dear subscribers and listeners. And it is podcast20, PODCAST20, podcast20. You can use it in our Fast Easy Accounting store and Construction Accounting Academy for a 20% discount. On behalf of Sherry and our team here at Fast Easy Accounting, this is Norhalma. Thank you all for listening. Stay safe and healthy.
And stay tuned for upcoming episodes on how to turn your contracting company into a process-dependent cash cow. Bye for now. Thanks for tuning in. You're listening to the Contractor Success Map. If you enjoyed the show, please leave a 5-star rating and review here on iTunes. And make sure to head over to www.contractorsuccessmap.com to subscribe to receive the latest articles and special offers. If you'd like to discuss your business strategy, simply click on the button labeled Strategy Session. And the best part, it's all free, just for you.